Well, hi everyone. Welcome to the Buffett and Beyond Saturday Stock Market Recap, and this is March 29th, 2025. It is the last Saturday of the month, with the whole new month starting on Tuesday. And let's get right into the market. Well, the market will be testing recent lows this coming week, and we're going to see that on the chart. However, April is one of those months when we have seasonal money flowing into the markets. Also, this coming week, we should also see pension money flowing into stocks on Tuesday, which is April 1st, and Wednesday, April 2nd. So usually the first couple of days of the new month sees positive market action. But we do have some questions, and we're going to look at that chart again in a second. Yes, it will be a very exciting week ahead, folks, so hold on. And our weekly stock analysis video, well, Lululemon, better known as Lulu, is making money, but its forward guidance this week was very subdued. Remember, it's a Canadian company, and it could get caught up in the tariff struggle. And our ETF video, well, our sector all-stars portfolio is following the NASDAQ 100. But when the market turns, this portfolio has doubled the returns of the NASDAQ. And let us look at the S&P 500. And, of course, these are volatility bands, the two red bands. And the line in the middle is the 20-day moving average. And we can see the market fell down, came back, and just kind of hung out here for a couple of days, and then tried to make a run at the 20-day moving average, which it did, and actually stayed above it for a day, and then came back down. And now, with Friday being a nasty day, it is going down to test this 5,500 level in here. And we'll probably see that test on Monday, as Monday is usually a weekday in the market. And who knows what's going to happen over the weekend, or if anybody's going to come out and say anything relative to the economy, relative to the tariffs. And don't forget, tariffs go into effect on Tuesday and Wednesday. So we'll just have to see what happens. We're going to have to hold on to our hats, folks. And then when we look at our intermediate term indicator down here, yes, it's turning down, but if this market can make a previous low and hold it there, and then this indicator turns back up again, that will give us a bullish buy signal in here. So we're hoping for that. And the market was just in a nasty mood on Friday because of the upcoming tariffs on April 1st and April 2nd. So we'll just have to wait and see what happens. But this is where we're going to be. We're going to be looking at this 5,500 level on the S&P 500 very, very closely. And let's look at another chart of the S&P 500. This is the candlesticks, and we want to see this short-term indicator up here turn up on Monday, or, well, probably not Monday, but maybe Tuesday. That would be nice. If not, we're going to get a little bit of a sell signal in here, but we're oversold already. So this is the area down here. This is the 5,500 that we showed on the previous chart down here. So we've got about 80 points to go on the S&P 500. We'll probably see it on Monday at least go down and test that level, and then we'll see whether it holds or not as Tuesday comes in, which is April 1st and then April 2nd. So we do have positive money flows expected to come into the market because of the beginning of a new month. But boy, we'll see. We'll just, with the tariffs coming into effect on April 2nd, we'll just see if this can hold in here. Now, the good thing is that the volume, now these lines down here represent the volume. The red lines represent the volume when the market closes down for the day. Green lines represent the volume when the market closes up on the day. And you can see this line. Last time the market was down here, we had heavy volume, and we had heavier volume than we did on Friday, which is this line right in here. And Friday was not heavy. It looked like a terrible, nasty day, but it was not heavier volume than it was on Thursday and Wednesday. So that's a good sign right in here, but Monday will tell all. But right now we do have this sloping down line, which means volume has dried up at least a little bit from the last time it was down here. And that's what traders want to see. They want to see a test of these lows in here, but they want to see it on lighter volume. So that's what we'll be watching on Monday. We'll be watching this 5,500 level on the S&P 500. We'll be watching the volume down here to see if it increases, or even if it stays the same as this past week, we'll be happy because it'll be less than when the market came down here the last time. So that's what we're looking for on the market this coming week, folks. Now, for portfolio protection, those of you who have protection in place all the time, and a lot of you do, we got an email from a subscriber from about 3 or 4 weeks ago that said he's finally reached $1 million in his market portfolio, and he uses the portfolio protection all the time. He just feels safer with it. These are up about 1% since they were bought. So let's look at the results of our 30 stock growth portfolio. And here we are, 30 stock growth portfolio for this year. And here's the returns of the stocks over here to the left, 30 stocks. And when we come down here, and let's zoom in down here, we can see the portfolio is down 4.5%. Now, with all the screaming and yelling that's going on out there, you would think the portfolio and the S&P would be down more than it is. But let's look at the S&P. The S&P is down 5.1%. Boy, the way they're talking out there, they're looking at 10%. Well, 10% from its previous high. But for the year, it's only down 5.1%. Our portfolio, 30 stock growth portfolio, down 4.5%. If you have those hedges on, they have gained 1% in value. And so if you're using those hedges, you're only down 3.5%. Folks, it's something you don't even worry about. Now, what happened in 2024 to this 30 stock portfolio? It wasn't the same stocks, but, I would say 3/4 of them were the same stocks. But it was up 37% while the S&P was up 23%. So you can see right now it's falling less than the market, just slightly less. And when it turns around, this portfolio outperformed, at least last year, by a long shot over the S&P 500. So again, the 30 stock portfolio was up 37% last year, while the S&P was up 23%. And over the past 22 years, our 30 stock growth portfolio has outperformed the S&P 500 2.5 times to 1 on a compounded basis. So yes, that's outperforming 2.5 times to 1. And remember, over any 10-year period, 96% of professional money managers cannot outperform the S&P 500 on a rolling basis. So those of you who are in index funds or in the index S&P 500, you could be doing a lot better by picking the top stocks, because the S&P 500 has the above average stocks in it, and it also has the below average stocks in it. So our job here is to pick the better than average stocks for our portfolios and let somebody else buy the below average stocks. So that's why you're looking at these numbers for 2024, outperforming the S&P 500 by about 50%, and over 22 years, outperforming the S&P 500 2.5 times to 1. So, folks, it's going to be an exciting week coming up, and those of you who are in our portfolios and those of you who are protected and in our portfolios, don't even worry about it. Clear your heads over this weekend. Go out to the beach. Enjoy the weekend. Be with your friends. Be with your family. Stay safe. And, folks, we'll see you right back here in a couple of days.